One of the most asked questions in my DMs is, let's say you have 1 million, let's say you have a certain amount of money that you want to invest to maximize on returns, or maybe to grow that money. Where can you best invest that money? So that question can be answered differently depending with your investor profile, depending with your age, your level of income, and your level of financial literacy as well, because you must compare different options to see which option gives you the best opportunity for capital growth. So in this video, we're going to be talking about the best opportunities that present investors the best opportunities at capital growth. Which of them most are going to be high risk, because the higher the risk, the higher the return profile. So we're going to be looking at some of the high risk investment options that you can consider whenever you're looking at capital growth opportunities. So let's get right into it. Before we start, it's important to define the role of this video, maybe the explanations that I'm going to give. So remember, when investors are trying to invest their money in financial markets, we are typically looking for either of the following two things. So number one, you can either be looking for passive cash flow, or maybe what we call passive income. So passive income, you can get this from asset classes like bonds, dividend stocks. You can also get it from real estate in terms of rental income and other cash generating assets. But now for capital growth, you're looking at a place whereby you can invest your money, whereby your money can grow. You're looking at capital multiplication. You're not looking at passive income. Even though you may still get passive income, the main thing you're looking at is how you can grow your money. So investors are either looking for passive cash flow or passive income, or they are looking for capital growth, what you call price or capital gains. So some asset classes can give you both options, or maybe both returns. But in this video, I want to look at the best options, or maybe the best opportunities that we have as investors for capital growth. So most of these are going to be high risk opportunities, because remember, high risk equals high return and low risk equals low return. So, and now if you want high returns, you must expose your portfolio to some level of risk. Before you even consider some of these options, it's better you have the basics right in place. So what basics am I talking about? So have any high interest debt paid out. So if you have any loans that have high interest rates, please first pay those off before focusing on high interest or maybe high capital growth opportunities. Number two, have an emergency fund in place, because before you start investing, it's good to have an emergency fund in place, because it's a fallback plan in case things went south. Then number three, have a sinking fund, save for those future short-term expenses, save up for them, and then have some savings or maybe some disposable income that you can save to invest in such high risk opportunities. So now let's get right into the ranking of these best capital growth opportunities. But even before we get to that, maybe I can clarify these. So who are these opportunities meant for? So for example, the young folks like myself who are looking for capital growth opportunities, you can invest in these opportunities. But now for people who are approaching retirement, retirees, maybe you can focus on passive income opportunities, maybe low risk opportunities. But hey, it's someone who is looking for growth. But then you can always consult your financial advisor to see whether these opportunities actually make sense or they are actually suitable for you. So let's get right into the ranking. So you're going to be ranking from number 5 to number 1. Talk about the disadvantages, the advantages of each, and the risks involved as well. So at number 5, I have what you call special funds. So special funds in Kenya, we are calling them special funds, but if you look at the basic classification of asset classes of most alternative investments, special funds in Kenya can almost be called hedge funds. If you understand financial assets, if you understand alternative investments, they can almost be termed as hedge funds. So what a hedge fund is, maybe for those of us who are not finance bros, so a hedge fund is basically a mutual fund. So a mutual fund is a fund that pools money from different investors. So it's basically a mutual fund that invests using these two strategies. So these two main strategies are what define a hedge fund. So number one, it employs both long and short strategies. So what long and short strategies is, let's say for example, you want to invest in a stock, let's say Safaricom in Kenya, and you anticipate that Safaricom is going to do well, so you're going to buy the shares of that stock. So we say that you are going long Safaricom, you are taking a long position on Safaricom. But then as well, you can also do the vice versa. If you believe that the stock price of Safaricom is not going to do quite well, you can go short on Safaricom. So shorting of shares involves borrowing shares and then you repay back when the price has gone down. So you can go short, you can take the short position on a stock. So with hedge funds, they can employ both long and short strategies. And then number two, the other strategy that hedge funds use over other mutual funds that make them be classified as hedge funds is they also use leverage, or maybe what you call borrowed money. So they borrow money or they use leverage to amplify returns. So in their pursuit of alpha returns, which is alpha returns are basically above market average returns, they employ leverage, or maybe they use leverage. What basically leverage is using borrowed money try to amplify returns. So those are the basic structures of a hedge fund. And then as well, the fee structure of a hedge fund is usually a basic fee. For example, some special funds will charge you maybe a 2% management fee, or maybe a 5% management fee, and then they're going to charge you a performance charge as well. So maybe any returns above their benchmark is going to be see a further charge as well. So if you look at the special funds in the Kenyan market, the likes of Manza X, the likes of the Oak Fund, the likes of the Kuza Momentum Special Fund, any other special funds you might come across, you're going to find some of these strategies. Maybe not all employed by all special funds, but you're going to find some of them. That's why I said that maybe they can almost be classified as hedge funds, because they employ some of these strategies and some employ all of them. So now let's talk about these special funds and why I'm ranking them at number 5. So why I'm ranking them at number 5 is because the return element, maybe most of them, they have almost, I don't want to call it a cap, but from the performance of how they've performed from a Kenyan context, most of them haven't performed very high returns, because if you look at Manza X, it was started in 2019, it has averaged a return of about 17-18% thereabout. So it has not exceeded that. It has not had the crazy returns that maybe you can get from other investment assets. Then if you look at Oak Fund as well, their target return is 20% only. So maybe it's a good return because it's above the market average, but then we can still have other asset classes that can give you way higher than that. So special funds, I classified them as number 5. So the good sides about special funds is, number 1, it's professional management. Maybe you have experts managing the money for you. But then again, one place that you have to be very careful with the use of the word expert is in finance, because in finance, your money being managed by an expert does not necessarily mean that you're going to see good returns or alpha returns. If you look at the performance of equity funds managed by professionals in the US stock market, you're going to see that over 80% of them don't beat the benchmarks. So rather than maybe investing in some hedge funds in the US, you're better off investing in just the S&P 500. In finance, professional management does not always guarantee good returns. It can actually guarantee the vice versa. But obviously now you have to pay the fees. So I like the management because for people who are not familiar with this finance street, you don't have to worry about choosing stocks, knowing when to buy, when to sell, and managing these kind of asset classes. So it can give you exposure to a maybe a rich, diverse set of asset classes. So that target rate of maybe between 17-20% is good based on the different special funds. And then again, it's above the market average of maybe 12 what bonds, money market funds, real estate can give you. So the return is good. So what I don't like about the special funds, number 1, the high fees as well, the high fees. So if you are a finance bro, you know the dangers of fees, even though for these special funds, they're giving us these returns net of fees. So the issue of fees is always a big debate in the finance space. Maybe one day I'll do a video explaining why. And then number 2, they have not been around for quite a long period of time. So they have only been around here for maybe Manza X has been here for 6 years. Other special funds have hardly been here for 2 years. So we don't have a very huge historical data to evaluate their performances. So that can be good, that can be bad, because that creates some uncertainty. So the pros, the professional management, and it offers you some diversification, some alpha returns above market average returns. Then it's quite accessible because you can access for most of them from as low as 250,000, some as low as 500,000. Then the bad side, the fees. Number 2, professional management does not always guarantee good returns. Then number 3, the high risk, it does not guarantee capital preservation. But then this should be not a discussion of this video, because like we mentioned, the assets for this video are going to be high risk. So all of them, you have a chance of losing your money. Then the last disadvantage is that we don't have a good historical data to evaluate how special funds will have performed in Kenya, because the best historical data we have is from 2019. So they are hardly 6 years in existence. So my take on special fund, I wouldn't say which one is good or which one is bad, because maybe I'm not advocating for any company here, but I'm just going to say that maybe you can do your research, understand where they invest their money, and then maybe consult your financial advisor, then know which one to invest in, but also know where they invest their money to know what risk you're involving yourself in. So that's special funds. That's number 5. Now let's go to the next asset class. So at number 4, I'm going to have a very controversial asset class here, and it's investing in the Nairobi Securities Exchange. So I'm going to start this conversation by giving you some interesting statistics about the Nairobi Securities Exchange. So this year, that's 2025. By the time I'm recording this on a Friday on 22nd of August. So the NSE, evaluating the performance of the NSE using the NSE All Share Index, which is an index that tracks the performance of all listed counters in the Nairobi Securities Exchange. The NSE, or maybe the NASI, which is that index, it's up by 30% year to date. So far this year, the NASI has returned a plus 30% year to date. And obviously, maybe if we continue with that trend, we might see the NASI closing at even a better rate or even a higher rate than 30%, because from the beginning of the year, if you invested your money in the NASI, that's the index that tracks the performance of all listed counters in the NSE, your portfolio will be up by 30%. If you look at last year, that's 2024, the NASI closed by a gain of 34%. So if you compare that performance of 34% compared to other special funds, for example, or other investments, you can see that the average investor in the NSE last year registered 34%. This year they've registered 30%. And actually, that's the average investor. So if you look at investors' portfolios, there are people who did way better than that. For example, my portfolio last year was up by 92%. This year, I think I'm already up by 60 something percent. So individual investors now, depending on the stocks that you have in your portfolio, you could have done probably better. If the average is 34%, so maybe a lot of people were above that, but we also had other investors who were below that. But essentially, that can give you some hints that you can do better than 34%. But that gives you that the average investor in the NSE is doing quite well right now, and also the last 2 years that we have had in the NSE. But then again, don't be fooled by that good performance of the NSE for the last 2 years. So if you look at the NSE, we have always been 1 or 2 years of positive returns, 1 or 2 years of negative returns. So we have always been up and down, up and down, up and down. So you have to be an active investor who knows when to buy and when to sell, when to buy the dip and when to take profits. So if you look at the performance of these indices that I'm talking about, whether it's the NSE 20 or the NASI, for the last couple of 25 years, you're going to see that we have never had 3 consecutive years of positive gains. You always have maybe 1 positive year, 1 negative year, 2 positive years, 2 negative years. So you must know when to buy and sell your shares. Don't be a buy and hold investor, because someone who had bought shares the last 10 years and they never sold and took profits and, buy, sell, you will hardly ever make money, because our market is not that robust. It is not a strong, efficient market. So sometimes the prices of the stocks may not reflect the intrinsic value, and our valuations and maybe the guys participating in the NSE locally and both foreign investors are not as many, and some of our stocks are thinly traded and the volumes aren't as high compared to other stock markets. So that's my brief primer on the NSE, but I think I've done a video on the NSE that you can look here to understand more about the NSE. But now to rank it, so the benefits and the disadvantages. So the benefits is that you can get very good returns. For example, I told you this year the NSE is up by 30%. Last year it was up by 34%. Last year my portfolio was up by 92%. This year it's up by 60 something percent. So you can get, there are guys who have made crazy returns over 100%. I think the other day you saw Didi Nyoro, who bought Kenya Power at an average of 2 bob. Then currently Kenya Power is at around 11 shillings. So he has flipped 50 million to 300 million in about 2 years or even less. So you can make crazy returns in the stock market. Maybe now the disadvantages is that you have to be a very skilled stock investor, because you must know which stocks to buy, when to sell, which most of us, maybe most people don't know about that. But then again, maybe I'm going to help those people who like to invest in the stock market, both locally and globally. We have a small community whereby we do give you stock recommendations, stock market analysis, and we guide you on which stocks to buy and which stocks to sell. But it's a community, it's an annual subscription whereby you can join a private investors group. So those are the disadvantages. Sometimes it's a high risk. You need to have the expertise to know when to buy and sell. Sometimes you can be a very good stock picker, but sometimes markets may not cooperate. Some factors like maybe geopolitics or even the political situation of a country may be beyond your control. For example, our NSE has always had these bad years whenever you're approaching elections, because investors flee and take their money to other investments just to protect them from the shocks of the stock market during electioneering periods. So that's it about the NSE. I ranked it at number 4. Let's go to number 3 now. So the third best opportunity for capital growth in our Kenyan markets, I'm going to have what you call exchange traded funds, or what you call ETFs. So for ETFs now, you can just still argue them to be under the stock market, but I'm going to have them maybe higher above the NSE because of the average performance of the NSE. It hasn't always been good. So if you lengthen the period of the NSE to maybe more than 2 years to 5 years, 10 years, maybe ETF investors can probably have registered better returns than our NSE investors. So I have ETFs. So I think I have a video about exchange traded funds, or what you call ETFs as well, and as well as global stock, because these are the next two options. So I'm going to link the video there. You can check it on my YouTube channel, and you're going to see it. So ETFs, what ETFs are basically, it's a basket of stocks. So rather than debating which stock to buy, more so in the offshore market, rather than debating whether to buy Apple, Nvidia, Tesla, you can buy, for example, an index like the S&P 500 that gives you exposure to the 500 largest stocks in the US. So the good thing about ETFs is you don't have to be an excellent stock picker. You can just buy an index or maybe an ETF that tracks the sector of the stock market that you're interested in. It can give you the exposure that you want, and your portfolio can grow. So for example, an index like the S&P 500 from the 1900s, it has averaged a return of 11% since the 1900s. An index like the Nasdaq 100 has averaged a slightly higher return of about 16% since around 1957. An average annual return of that amount. Even though you're not an excellent stock picker, you can still register good returns in the stock market. A return of 11% and 16%, some of you might think that that's a very low return, but you're talking about a USD return. If you look at USD assets, that's quite a high return because you're as well protecting your portfolio from currency risk, or what you call currency depreciation, or what you call the weakening of the Kenyan shilling. So it can be a good return. Also, considering that maybe 10 years ago, one Kenyan shilling was exchanging at around 86 shillings. Today we are at 130. So in less than 10 years, maybe in about 10 years, our Kenyan shilling has depreciated by about 50%. So for someone who had invested their money, for example, in the S&P 500, they have seen their portfolio not only get the gains, the 10%, 11% per annum, they've also seen their portfolio gain because the USD has gained against the Kenyan shilling. So it has protected them from the currency risk as well. So I'm going to put ETFs at number 3. I think I've have the video here about ETFs and offshore stocks, so you can look at it to understand them more. But the advantages is that you don't need to be an excellent stock picker. They have registered good returns over the long term, and out of the risk profile, the risk profile of all the assets that I've mentioned here, maybe ETFs have the lowest risk profile out of the ones that I mentioned. So if you're that person who is not interested in taking a lot of risk, maybe you can, one of the safest options you can take is the ETFs out of the options that I've given. So they are the easiest to get started with and to manage because you don't need to be an excellent stock picker. That's it about ETFs. And then the other thing is that they are passive, so you're not paying a lot in fees, and like the special funds and like some other mutual funds, so they are passive. So you are doing a lot of cost saving on the fees. Then the bad side about ETFs, sometimes you may invest in some thematic ETFs, like maybe you are investing in an ETF that focuses on the healthcare sector that maybe may underperform. So sometimes it's good to choose the ETFs that you are investing in. And sometimes we have very many ETFs. You have very many ETFs that track different things. So sometimes it may even be a challenge to choose the ETFs. But if you just choose the main ones like the S&P 500 and the Nasdaq 100, then maybe a few thematic ETFs, then it can be good for you. But by and large, ETFs are a no-brainer. They are one of the excellent assets that you can use to compound your wealth over the long run. And now maybe another advantage that I forgot is that you can use a spot ETFs to get exposure to some assets like gold, silver, and Bitcoin. So if you don't want to own those assets directly, because they carry some inherent risks, you can own them via ETFs. So for example, you have the IBIT ETF, gives exposure to Bitcoin. We have the GLD ETF, gives you the exposure to gold. We have the SLV ETF, gives you exposure to silver. So you can own, maybe you can get exposure to other asset classes like crypto and commodities by owning an ETF. So they are very good. So let's go to number 2. The second best opportunity for capital growth for investors in Kenya are maybe what you call global stocks. So for global stocks now, I think we have talked about the stock market so far because we talked about the NSE stocks, we have talked about ETFs, and now we are talking about global stocks. So it's almost the same thing, but now here you are investing in individual stocks. So it's a bit riskier, just like choosing stocks in the NSE. Then you also need some good stock picking skills as well. So if you look at the performance of some stocks like Nvidia, Palantir, these stocks over the last few years have returned incredible returns. I think Nvidia has over about 4,000 times. Palantir has been a 10-bagger over the last 2 years since 2024. If you started buying from 2024, it has seen an increase of about 100 times. So we call that a 10-bagger. Stocks is one of those places whereby if you are lucky and if you are a good stock picker, you can make a fortune easily. And that's why we say that maybe the stock market is one of the greatest wealth creation machines ever created. Because if you look at investors like Warren Buffett, that's one of the avenues they have used to compound their wealth over the long run. So I'm going to put US or maybe global stocks there because of the, like I mentioned, high risk, high return. But then again, like I mentioned, if you want to know how you can access global stocks, I mentioned I have done a video on global stocks and ETFs as well. The pros and the cons performance as well is just similar to the Kenyan stocks, but maybe the global markets are a bit much better. The US stock market has performed way better than the Kenyan stock market, so maybe there's that upper hand. But maybe just to summarize about global stocks, so the advantages: you can make crazy returns, you can make 1,000 times, multiply your money much faster, but then again it's high risk, you can also lose your money, and then it requires some expertise in picking stocks. Now let's go to the number one opportunity that I believe is for capital growth. Now, top of my ranking on the capital growth opportunities, I'm going to have Bitcoin. So I know most of my viewers, maybe most of the people who will be watching this, have different opinions about Bitcoin. Some people will be calling it a scam. Just to first solve that issue of people who understand it and people who do not understand it, I would like to give a few book recommendations. Now, for someone who still doesn't believe in Bitcoin, maybe someone who still has a challenge of understanding what Bitcoin is and what problem it's trying to solve. So the books that you can read about Bitcoin, you have one, Broken Money. I think it's by Lynn Aten. Maybe I'm going to butcher the names here, but I'm going to attach the books here. The other one is the Fiat Standard, another book called the Bitcoin Standard as well. Those are very good books to start with for you to understand Bitcoin. Then as well, you can check some lectures, maybe some debates online. So the biggest Bitcoin proponent is called Michael Saylor, who is the CEO of a company called Strategy that they renamed from MicroStrategy. So he's one of the biggest individual investors in Bitcoin. He's the biggest believer, maybe the biggest proponent online about Bitcoin. And the biggest opposer, maybe the biggest opponent of Bitcoin is a guy called Peter Schiff, who is the bigger believer in gold and not Bitcoin. So you can check debates about those guys. So if you look at Michael Saylor, he has several debates with very many guys debating the essence of Bitcoin and guys who are opposing him. Peter Schiff as well, he has very many discussions, debates about the two asset classes as well. So you can check debates and even documentaries online just to educate yourself about Bitcoin and its role and what it's trying to solve, so that maybe you can understand it. But I don't want to say that maybe I don't want to force Bitcoin as an asset class to anyone. Even for my clients, I usually don't force it to anyone. It all comes from a place of first understanding what Bitcoin is, how to invest in it safely, and the responsibility that you must take once you become a Bitcoin investor. Why do I rank Bitcoin as the best opportunity for capital growth? So I'm ranking my asset classes based on historical performance. So maybe the performance in the future might change, but based on historical performance, that's what I've used to rank my asset classes. So if you look at Bitcoin, it has been I think it is the best performing asset class of the last decade. So it has returned over 10,000% in the last decade. It has averaged a return of 82% per annum. Then again, if you look at how Bitcoin as an asset class, maybe as an investment avenue, has been recommended over time. So if you look at when Bitcoin was coming into the market, most financial companies, I'm talking about the global powerhouses like BlackRock, Blackstone, Charles Schwab, Vanguard, Fidelity, Morgan Stanley, most of these big investment banks told the investors to stay away from Bitcoin because they imagined that maybe Bitcoin will not do well, maybe it was just a passing cloud. But fast forward a few years later, they started recommending a shares of 1 to 2% allocation. So they started telling the investors, yes, you can own some Bitcoin or maybe some crypto, but maybe you can only own 1% or 2% of your portfolio. Fast forward a few years later, then they shifted that number to 5%. And nowadays, most of the same companies, they are now recommending an allocation of anywhere between 5% to 15%. So some are between 5 to 10%, others are 10 to 15%. And actually, even one of the guys like Ray Dalio, who is one of the biggest hedge fund investors, he recommends an allocation in both Bitcoin and gold of about 15% in your portfolio. The other good thing about having Bitcoin in your portfolio, for those of us who are finance pros, there's something we call correlation. So Bitcoin has a low correlation with other asset classes. So it's good for diversification. After talking about all that, maybe I'm going to summarize and say this about Bitcoin. So number one, it has averaged a return of 82% per annum for the last, I think, 10 years. We are still early for Bitcoin. I don't want to project maybe what price Bitcoin will get to, maybe in the next few years, but maybe you can get, I think a few years ago, we used to think that maybe getting to 100,000 was a big thing. Maybe now the big milestone is getting to $1 million USD. So we are still early. Most people don't still know what Bitcoin is. Most people don't understand it. So we still expect Bitcoin to continue doing well, even though the rate of return might slow down from maybe 82% per annum to maybe, it might slow down to that, but the expected compounded annual growth rate for Bitcoin over time has been projected to slow down from maybe 2% to maybe stabilize at around 26% per annum, which is still quite high. So we don't know the future, how maybe Bitcoin is going to perform, but I still rank it as one of the best asset classes to have because we are still in the early days. So people might ask me, what about the other cryptocurrencies? So unfortunately for me, I'm a Bitcoin maxi. By Bitcoin maxi, I mean I'm one of those individuals who only believe in Bitcoin as the best cryptocurrency. So we also have other things like altcoins like ETH, like Solana, like Ripple, like Doge, like and other meme coins as well. So for me, I only believe in Bitcoin, even though nowadays and more so this year, we have seen more and more applications of the Ethereum cryptocurrency, more so its use case in smart contracts. So maybe ETH can have some better use cases, but for me, I only believe and invest in Bitcoin. If you don't want to be a Bitcoin maxi like myself, you can explore other cryptocurrencies, but be very careful. Read what that cryptocurrency is trying to achieve and who are its main founders. Just try to see and get more information about that cryptocurrency. So for me, I only believe in Bitcoin and I'm a Bitcoin maxi. Maybe the reasons, maybe we're going to discuss them in a future video when I tackle Bitcoin. But yeah, that's my ranking about asset classes, the best asset class that can give you the best opportunities for capital growth. So if you are a high risk investor, these are some of the opportunities that you can consider. So we've talked about special funds, NSE stocks, ETFs, global stocks, Bitcoin, stock crypto. But obviously there are some other opportunities that are there in the market that I've not talked about. For example, I'm not a big fan of land, but land in some areas can rise in prices quite fast. If you look at the Hask index, some prices are highly or maybe are quickly rising in prices of the value of their land, but now maybe liquidating might be an issue. But then again, yeah, there are other asset classes that we have not talked about, but I've talked about the main asset classes that can present you the best opportunity for capital growth. So let me know in the comment section, which asset class do you believe has the best option, maybe the best opportunity for capital growth. Let me know which ones you have in your portfolio and which ones you feel that I have missed out on. And let me know what you think about my ranking. How will you rank the opportunities that I have listed? Will you change anything or will you still have it at the same ranking? So in case you love personal finance content, in case you want more videos about personal finance, you can consider subscribing to my channel because I will be releasing more videos, more educational content that can help you be more educated, get financially literate, and help you make more informed financial decisions. So that's it for this video. See you in the next one. Bye.